Hello and welcome to Profiles in Risk. This is your host, Tony Cañas. And today I have with me Michael Pallas. I hope that I'm saying it halfway correctly, who is a co-founder of Flow Private Flood Insurance. So Michael, thank you for joining me today. How's it going?
It's going great. Tony, thanks for having me on today. I really appreciate it.
Awesome. Michael is a former neighbor for me. I used to live in Berkeley.
Right
it's
on.
been about 5 years since we moved out, but
Cool.
love the Bay Area. So Michael, we always give the guest a chance to give the elevator pitch. So what is Flow Private Flood Insurance?
Yeah, Flow Private Flood Insurance is a private flood insurance MGA. That's the heart and soul of what we do. We're a Lloyds cover holder, and we have a number of binding agreements in place. And what we have built is a platform, quote to issue platform, that instead of hiding the syndicates behind a curtain, we allow our retail agents to choose who they want to work with. So instead of displaying one rate and allowing an agent just to bind one policy type, they go through the normal quote questions, 8 to 10 questions. We do data pre-fill, all the new normal stuff, I should say. And we give up to 6 different quote returns from different syndicates. They have different policy forms, different coverage limitations, and we let the agent choose. So if the agent wants to go with the least expensive option, maybe an NFIP mirror policy, they'll have that option. If they have an insured that values a more robust policy form that's willing to pay a little bit more with some different coverage types, then they can go that route as well. Now, with the advent of risk rating 2.0, the NFIP or the tech platforms that work with the NFIP, they have rating APIs now. So we'll also be displaying a FEMA NFIP risk rating 2.0 quote. Now, what's great about our platform is all of the options we have on there are bindable. So we're not a comparative rater. We are a platform where an agent can take it start to finish for every market outside of the NFIP, bind online service, automated renewals, the whole nine.
Okay, that is very interesting. So let me back up a little on flood. Okay,
yeah, please do.
So flood, in the first CPCU test, CPCU 500, we were trained that earthquake and flood are not insurable in the private market because of the catastrophic potential, and then NFIP, and I don't have my associate in flood insurance, but what I do understand of NFIP, so NFIP is my understanding is it's not actuarially based, and it's also not what's it called? It's also not a, I can never remember the word. It's not a full reimbursement, right? It doesn't cover your entire value the way that
You're exactly right about that. So the reason why the private market hasn't developed until recently is there were various subsidies put into place. So there wasn't an actuarially sound rate to compete against. So any private insurer obviously wants to make an underwriting profit. And if you're going against federally subsidized rates, then there's not always a lot of opportunity to accomplish that.
So about 5 years ago, when I was in California, we had the whole Biggert-Waters change, right? So which it's the last names of the senators, but it's hilarious because it sounds like bigger water. Which very so anyway, Biggert-Waters was supposed to bring it to something more actuarially close, but then that didn't happen, right?
Yeah. So what happened was pretty much chaos, and that's actually where we entered the market because we saw opportunity. So really what happened is the rating model changed, and you started seeing rates go just out of this world. You go from $800 to $8,000, and we saw the opportunity here. to step in and start taking some of the market away from FEMA with private flood placement. And in my opinion, that's really where the private market took off. There are some legacy MGAs that do an amazing job, and they've been around, 10, 20 years, and they've been pioneers fighting for the private flood insurance industry. But right around that time that you mentioned is really when these programs started to take off.
So risk rating 2.0, is it a result of Biggert-Waters, or is it like what replaced it after Biggert-Waters didn't work?
Yeah, so it's basically a mechanism for bringing an unprofitable FEMA flood program to a point of potentially having actuarially sound rates over time. So we went from publicly available rate tables where you could, if you wanted to, exactly match the NFIP rates nationwide. And we saw that in the early days of private flood insurance, where certain MGAs or providers would take the NFIP rates, discount at 10% to easy win. As things have gotten a little more sophisticated, things have changed. But risk rating 2.0, it goes from publicly available rates to your more classic black box rating structure driven by an algorithm that is not available to the public. And the goal is to bring these rates up to where they should be over time. Now, what that means for the private market is there's going to be a major disruption. We're in the middle of it right now because new business rating has already hit risk rating 2.0. Renewal rating on risk rating 2.0 has started, goes into effect on 4/1, but rating on that's already started. But it happens over time. So there's going to be chaos in the marketplace because of rate displacement. And it's not just going to be a 1-year thing. This is going to be a multi-year thing where certain properties are going to see a increase year over year over year over year. Rate increases lead to shopping. Shopping leads to agents needing to find solutions, and that's really where the private market comes into play.
Okay, so and for the agents listening, basically anybody that you write that has an NFIP policy is going to be affected in one way or another, and you better have your private markets in a good place.
Yeah.
So you're doing it through Lloyd's, and this is where my knowledge of Lloyd's is limited. So I understand that Lloyd's is not an insurance company; it's a market, right?
Yep.
And that it's a deeply well, you can insure just about anything, but it's very conservative in the way that it works. Right. If the U.S. insurance industry technology-wise is backwards, Lloyd's pre-pandemic was a lot more so. So it's what I'm getting to is it's really impressive that you're quota bind ready while going through Lloyd's cover holders. And not only that, but that you're giving the agent the options openly on.
I appreciate the observation, and you're spot on in a lot of ways. To kind of demystify Lloyds of London, Lloyds is a governing body. Lloyds itself does not underwrite insurance. The syndicates underwrite insurance. So the Lloyds has to be very buttoned up in terms of financially regulating the syndicates, because if something goes sideways with the syndicate, it affects the perception of Lloyds and it affects the business operations of Lloyds. So there are very tight controls in place at Lloyds to make sure that the participating syndicates operate within the confines of where they should be. And what you said, can Lloyds insure everything? That's the perception. And yes, Lloyds, they're, it's the example is always when you're learning insurance, you can insure your hand if you're a famous painter at Lloyds, and that may be the case. But I think it's important for agents when they're trying to understand Lloyds. Lloyds is a place of innovation. Lloyds a lot of times is where new products start. And they often live there through their eternity. Sometimes they spin off into different, into different forms. But what's really cool about private flood insurance is it's in a highly innovative space right now. So you may have some syndicates and products and Lloyds that are still doing, rating out of binders, which I really don't think happens that often. But the folks that we've partnered with, they're rating via APIs. A lot of the partners that we have, we're reporting binds via APIs. So it is more of a modern approach to insurance rating and managing a book of business.
Okay. And what kind of agencies are good partners for you guys? Do you require a certain amount, a certain size, a certain amount of flood business? How does that work? If I have an agency, how do I know if I should reach out?
Yeah, so myself and my business partner, A.B. Sultan, we both started in retail. So we understand retail agencies. We know what retail agents go through on a day-to-day basis. We also understand what owners go through of retail agencies. And we look at flood as for most agencies as an auxiliary product. Now, some people make it their primary, which is what we did over on the retail side. And we cross-sold around flood insurance, which I think is a good strategy, and a lot of people do it. But for most, it's an auxiliary product. And we know that the last thing an agency owner wants is a commitment on an auxiliary product. Look, we're adding value to your agency, but we're also not going to hammer agencies for production. What we really want is, hey, any retail agent is welcome to contract with Flow. But what we'll do is we'll meet your energy. If you want one-on-one training, we'll give you one-on-one training. If you want to learn via video library, you can learn via a video library. If you say, hey, give me some logins, let me go, then that's okay to do as well. We built our platform to make it intuitive for folks that have a good grasp on technology to be able to, go from a quote to issue a policy in 4 minutes and do it actually without training. But we love training folks. So, the risk profile is broad. We work with one-person shops. We work with national aggregators. We really work with anyone that's looking for a flood solution. And I think right now, every agency owner, whether it's us or another MGA or a combination, you need to lock down and identify your private flood partners. Because if you do have a book of business of flood, or if you do have clients that inquire about flood insurance in your office, you need to have a go-to market. You need to have a go-to partner for private flood insurance.
Makes sense. And I looking at the website, I see that you've got the agency information. You've also got a referral partners program. So what is the referral program? How is it different from just accessing as an agent?
Yeah, referral partner program is really for agencies that don't want to deal with it. Well, they don't want to write flood insurance, or it's also for real estate, mortgage brokers, people that are trying to place flood insurance for their clients. We have a referral program where folks can send referrals in, and then we spin those off to our retail partners to handle, depending on the state, depending on the territory. It's a small part of the business we do. I mean, the overwhelming majority is directly via retail agencies, and that's definitely the area of growth for us.
Okay. So you can outsource the flood piece if you don't want to deal with it.
If you so choose. I think the premiums are getting to a place and the revenue is getting to a place where it makes sense to write in-house. And look, the first time I saw a flood insurance platform, 20 years ago when I started insurance, I looked at the rating and I said, forget about it. Because NFIP asked so many questions, and you start looking at elevation certificate information and figuring out what goes where. Our platform makes it really easy. Obviously, elevation certs aren't required. They're not required for risk rating 2.0 anymore, but they're not required on our platform. we pre-fill. So we do a flood zone determination. We give you the flood zone, which you can update, but we give you the flood zone. We pull the square footage. We pull the year built. So really, it's a matter of answering a couple underwriting questions, telling the platform what coverage you want, and getting your quotes back. It's way different than it used to be rating flood.
That's fantastic. So how did it come to be? How did so looking at your LinkedIn, so you've always been on the sales side of the industry. So you spent 3 years at Liberty. I'm guessing as a Liberty exclusive back when they had exclusives.
Yeah, exactly. So I was in college, and like most college people, I was broke, and I went to a jobs fair. I knew I wanted to get in sales, and Liberty Mutual said, "Hey, we got like a $5,000 signing bonus." And that's how I got into insurance.
Okay. So you do Liberty for a little while, and then you go to an agency, and spend 14 years at the agency. So what was it at the agency that you saw that was super broken that you're like, this needs fixed?
Yeah, so we, as the agency developed over time, we became a digitally enabled agency where we did a lot of content marketing and also pay-per-click marketing around niche products. So we looked at how the primary lines of insurance are marketed and how expensive it is to do that. You look at auto insurance, home insurance,
one of the most expensive keywords.
We just, what are we going to do? Go against Geico, go against Progressive and State Farm? No way. But we knew that there was opportunity around there. So right when, you mentioned Biggert-Waters Act, rates started exploding, we said, aha, there's an opportunity. Let's start writing private flood insurance. So built a WordPress site, integrated with everything, started a PPC campaign, and we started writing a lot of flood insurance. So we did that for 2-3 years, did the same thing with earthquake, but flood really took off. And, there comes a time in the journey of a retail agent owner where you say, all right, I either need to double down and double the size of this agency, or I need to take my foot off the gas and not focus on growth, but focus on stability. Or I need to pivot out, explore other opportunities or other areas in insurance. And so myself and my business partner, maybe a few years back, started reaching out to Lloyd's brokers and just presenting our vision. Hey, we want to start a private flood program. Linked up with an amazing Lloyd's broker, CJ Coleman out of London, and they, over the course of time, organized a series of meetings for us in London, and the rest is history. So while we were planning Flow, we were also planning our exit from Stone Creek. So we did sell Stone Creek over a year ago, and we have exited fully Stone Creek. They're in great hands, and we appreciate all the people over there, but we're fully focused on Flow Flood and really helping push the private flood market forward. Congrats. So sorry, I appreciate that. That's a really long answer to a short question, which is we saw an opportunity and we saw that it was partially addressed, but we thought that we could contribute to the pivot from NFIP to the private market.
And such an exciting time to focus fully on flood. I'm not old enough to remember, but I am a history nerd, and it reminds me of like air travel deregulation and how it became an incredible opportunity, or other times where things that were super regulated. And in the case flood insurance, like, you weren't prohibited from running a private flood program. It was very hard to compete with a tax subsidized NFIP. Exactly.
And a good parallel for retail agents is, think if you had 93% of your business with one carrier, and that carrier changed their rating structure. A lot of times with rate increases, what do you do? Where are you? That's kind of where we're at right now. 93% of the business is with NFIP right now. And the rating model is completely altered. And that I don't want to say that premium is up for grabs, but people will be shopping, and there's a potential it shifts to the private market. Outside of emerging markets like cyber, and we've seen crazy growth around cyber in the last 4 or 5 years, and a ton of acquisitions and pretty wild valuations. Outside of new products, there is no other line of business that has this shift. All the other lines are mature. You look at whatever, homeowners insurance. I mean, how many homeowners insurance carriers are there with well thought out products, ton of premium on the books, hundreds, right? When you talk about national and retail throughout and regional, throughout the whole country. So for folks in our space at the MGA level, for folks above us at the carrier level, and for folks that we partner with at the retail level, there's a ton of opportunity. And the real winners at the end of the day are the consumers, because they're finally going to get the opportunity to purchase coverage that is meaningful and not just what they are being offered. To your earlier point, you said, hey, from what you understand, the NFIP doesn't offer full rates. Yeah, this is the one product that's required by lenders that doesn't offer a full replacement cost value, right? Up to $250,000 for residential property, $500,000 for commercial property. And because these are the limits set by the NFIP, that's what the lenders tell their clients they need. So you're buying a new house and you don't know about flood insurance. You're not an insurance person, right? Your real estate agent, your mortgage broker says, hey, I need a home insurance policy for full replacement cost, and I need a flood insurance policy for $250K in coverage. There's a problem there. There's a problem, is that the fundamental structure of how flood insurance has been underwritten, presented to consumers, is one that's in most cases not going to fully protect them. And then we talk about other coverages that a consumer should have. So we think about loss of use. Loss of use doesn't exist on the NFIP policy form. So you have coverage for your structure and coverage for your personal property, if you so choose, with restrictions of what type of personal property is covered and where it is covered in your home. And then you look at the private market, and you see some of these developments. Well, you see some folks are offering loss of use coverage, which we offer. Some people are offering pool coverage. Some people are offering coverage in basements. And it allows the consumer to get a product that suits them, instead of, hey, here's your one product and take it or leave it.
So at this point in the private market, are you able to kind of match my homeowner's coverages for flood, like full coverage for the home, replacement cost?
100%. Yep. So we have one of our partners that we work with, that if you break down the policy form, it's essentially an HO3 with flood as the peril. When if you compare, you put that next to a homeowner's policy, the coverage looks strikingly similar outside of the peril. The only peril is flood, obviously. And it's available.
One thing that I was wondering when you explained that the system gives the agent all of the six, well, up to 6 different quotes from different syndicates. Does it provide any assistance on choosing between them, or is it like, here's the form?
Absolutely. So we'll call it the quote return page. It gives you the different options, shows you the rate for the different options, and you can expand a section and it shows you the coverage that's available. So it'll show you your dwelling, your other structures, your loss of use, your personal property, if it's available. It may be available for 2. Some of those sub coverages may be available for 1 or 2. It totally depends. But then, yes, we also have we have links out where it describes the differences. So you can just at a glance say, hey, if I'm choosing this syndicate, what are the implications for the policy form? And it's not, like you said, it's not, here's a policy form, figure it out. Let's be real. Most insurance agents don't read policy forms for every product they sell. And that's not a knock on insurance agents. Just if you're a broker and you're working with 40 different products, and these products change every year or two, you're probably not reading every policy form. So we encourage agents to read the policy forms, but we also make it easy for them to make a choice. As a part of the training, we're going to let folks know, the differences in choices that they have, but we're also going to support that within the ecosystem. So when you are making a choice, 2 inches over on your screen, you can learn about the differences between your choices.
Excellent. Awesome. Great to hear that the private flood market is finally getting its day in the sun, so to speak. It's been very, very, very interesting. And when it goes live, I will tag you on LinkedIn so that people can easily find you, and I will
appreciate that.
The company's website, supereasyflowinsurance.com, on the show notes. And yeah, very, very, very exciting stuff going on the flood space.
I appreciate that, Tony. And to me, the part that's the most gratifying about it is we're still at a stage where your competitors are also your mates in the bunker, if you will. It's a developing industry, and I think the best thing about insurance on the business side are the relationships and the people you meet along the way. And it's no matter how digitally enabled we all get in our different channels, the foundation is relationships with your carrier partners, relationships with your agents, relationships with the retail consumer. And yes, are we in direct competition with other MGAs, with carriers that offer private flood? Absolutely. But at the foundation of it all, it's the private market coming together and establishing a place within agencies' offices and within within consumers' homes, and we're doing that together. So I look at the pioneers of private flood and have nothing but respect for them, because they've just pushed this thing forward. I look at the innovators of private flood as really being the benchmark for what we all can be doing. And there's great lessons to learn from all those companies and all those folks. And we're really in it together. And to me, that's exciting. And that's also gratifying.
Awesome. That's a fantastic message. And you're absolutely right about the industry. It's staffed with a lot of people that care about what we do and its importance in the economy. It's a people business, regardless of how tech enabled it gets. It'll continue to be a people business for sure.
And I think we've seen that recently more than ever, right? Is you still need good people supporting your products.
Absolutely. Thank you very much for your time.
Absolutely. And thank you so much for having me on.